Hi students, in this video I'm going to solve the third problem. So third problem from the insolvency of the all partners. When insolvency of the all partner means the all partners are not able to pay their liabilities. So in this they are going in a loss and they have decided to close the firm. So third problem is that Dinesh, Mangesh and Ramesh are a partner sharing profits and losses in the ratio of 2 is to 2 is to 1. They decided to dissolve the firm on 31st March 2018 when their position was as under. So their balance sheet is on 31st March 2018. Their assets are building, computer, data, goodwill and bank. These are the assets and the liabilities of capital Dinesh, Mangesh, Ramesh, creditors, bills payable. So So their assets and the capital balance of Dinesh, Mangesh and Ramesh is 26,000, 22,000 and 18,000 it is. The firm was dissolved on above date and the following is the result of realization. The assets were realized as building rupees 40,000 rupees, computer rupees 30,000 rupees, data rupees 10,000 rupees and realization expenses amount rupees 2,000 and all partners were insolvent. The following amount was recovered from them. Dinesh bought a 2,000 rupees and Mangesh bought 2,000 rupees. Need to prepare necessary ledger account to close the books of the firm. So here the in the realization we had to first to send all the accounts for the realization account. So once they send their realization account and what is how much they are getting the loss, that will be transferred to partners capital account. So the recovering amount will be getting it from the realization account. How much they have the cash, that is the realization account. So in that building amount, all the assets will be coming in a credit side. All the assets. So all the assets will coming in a debit side and liabilities will go then a credit side. So assets, what are the our assets? Building amount is 78,000 they have building amount 70,000 rupees. Next they have computer. This is also asset for them computer and amount is 45,000 rupees. Next amount is data's amount and goodwill amount. So building amount 70,000, computer 45,000, data's amount 20,000 rupees and goodwill amount is 35,000 rupees. So altogether amount is 1,78,000 rupees. This 1,78,000 rupees is a assets from assets amount. This will be sent for the recurring amount recovering. So next, so in the liabilities and the last entry is left or realization to bank account realization expenses amount rupees to 2,000 rupees. So realization expenses amount is 2,000 rupees. So passed all the assets in the debit side. This is to 1,78,000 rupees and 2 lakh rupees. Total amount is 1,80,000 rupees. 1,80,000 rupees. 1,80,000 is the total amount, the assets after selling their assets. 1,80,000 is the amount. And next is the liabilities. When the liabilities is a in a all partners insolvent means nobody is the able, all the partners are not able to pay their liabilities at that time. So we should keep the account of creditors and bills payable. Here we have a creditors account and a bills payable account. We need to open a third party liabilities creditors account and bills payable account separately. So next is the assets were realized as building rupees 40,000 and computer 30,000 and a data 10,000 rupees. In the realization account, we only take the assets. The liabilities entries are not coming under in a realization account. How many accounts are there? Creditors or bills payable. So what are the creditors liabilities are there? So those will be open a separate account for the creditors and bills payable for the liabilities. So by bank account in a credit side, the assets were released as building 40,000 rupees, computer 30,000 rupees, and debtors 10,000 rupees. These assets are sold for the amount of building 40,000 rupees, building 40,000 rupees, 40,000 rupees, and computer computer for rupees 30,000 rupees, and debtors 20,000 rupees. Sorry, data 10,000 rupees. Computer, and these are the assets are released. These are the assets are sold. So 40,000 and 30,000 and 10,000. So total amount is 80,000 rupees here. 40,000, 30,000 and 10,000 is total amount is 10,000. So it is in a debit side balance is more, that is 1,80,000 rupees. 1,80,000 rupees, and this 1,80,000 rupees minus 80,000, it's a 1 lakh rupees is left. This 1 lakh rupees is a loss. This 1 lakh rupees is a loss. This 1 lakh rupees will be transferred to distributed to three partners, Dinesh, Mangesh and Ramesh, in the ratio of 2 is to 2, 2 is to 2 is to 1 ratio. This 1 lakh rupees will be transferred to the by partners capital account. Loss is 1 lakh rupees. This will be transferred to the realization account for the partners capital account. So Dinesh amount 1 lakh into 1 lakh into 2 divided by 1 lakh into 2 divided by 5. The amount is 40,000 rupees for the Dinesh. And for Magesh also same 40,000 rupees. And for Ramesh it is 20,000 rupees. Like a 1 lakh into 1 divided by 5. So Ramesh will get a 20,000 rupees. So total amount in the both side it is 1,80,000 rupees and a 1,80,000 rupees. This is the loss will be transferred to a partners capital account. After the realization account will transfer to their partners capital account. Will prepare partners capital account. After the realization account calculation, we need to calculate partners capital account. In a partners capital account, debit side amount will be the realization account transfer amount will be transferred to this amount will be credit amount of the loss will be transferred here. Here to realization account. To realization account. Loss on realization transferred to partners capital account. Loss on realization. So amount is 40,000, 40,000 for Mangesh and Ramesh 20,000 rupees. This 40,000 will be transferred to your realization account, 40,000 rupees, and for Mangesh 40,000 rupees, and for Ramesh it is 20,000 rupees. And next their capital amount is Mangesh balance by balance brought down amount by balance brought down amount is by balance brought down amount is Dinesh it is 26,000 rupees, 26,000, and for Magesh 22,000 rupees, and for Ramesh it is 18,000 rupees. And by bank account the assets, the all partners were insolvent. The following amount was required from the Dinesh is 2000 rupees and Mangesh it is 2000 rupees. These two partners have bought a money from their private estate, so that is 2000 rupees. Dinesh 2000 rupees and Magesh 2000 rupees. So this will go to the bank account 2000, and Magesh also 2000 rupees. This will also go to the bank account by bank account. By bank account amount is 2000 and 2000. So after this debit balance is more. Debit balance is more, credit balance is less. So that's why we'll do the total amount 40,000 rupees. Total amount for Dinesh 40,000 rupees, and for Magesh also it is 40,000 rupees, and for Dinesh Ramesh it is 20 it's 20,000 rupees. So same amount is coming this side also 40,000. So in this total amount, credit side is amount is less, debit side amount is more. So this amount is 40,000 minus 26,000 and 2,000. It is 12,000 rupees. 12,000 rupees. Here 22,000 minus 2,000 amount is 16,000 rupees. And here it is 2,000 rupees. This will call by deficiency account. By deficiency account, this will be going to deficiency account. So this is a by balance brought down amount is 26,000 and 22,000 and 18,000 their balance, and the deficiency amount, and by bank account they both partners bought the amount from the home. So amount is their private assets, that is 2,000 rupees and 2,000 rupees. And so debit balance is more, uh, that's why the deficiency amount is 12,000 rupees and 16,000 rupees, and 2,000 rupees is the deficiency amount of the partners. Three partners amount. This amount is not able to pay from these partners. So after this, we'll open a account of creditors and bills payable account. This partner's capital deficiency amount will transfer to the deficiency account. 12,000, 16,000, and 2,000 rupees will be transferred to the partner's capital account to deficiency account. So after closing the partner's capital account, the deficiency amount from the Dinesh 12,000 rupees and Mangesh it is 16,000 rupees, and Ramesh 2,000 rupees by deficiency account. This deficiency account amount will be transferred in a partner's capital account to deficiency account. So this is the partner's amount. So how much amount deficiency amount, and now we'll see the bank balance of the partners. So first bank balance of the partners. First thing is, as in asset side, bank amount is 8,000 rupees. That will come in a credit side. It is in debit side, it is in credit side, so that amount will come in a credit side. So bank amount to bank debit side amount is 8,000 rupees. And the next is the realization expenses amount is 2,000 rupees by balance brought down by realization account. Realization amount by realization account amount is 2,000 rupees. After the bank account entries 2,000 and 8,000, and a creditor's account which is given in the balance sheet, creditor's amount is 80,000 rupees. By balance brought down 80,000 rupees. By balance brought down amount is 80,000 rupees. Creditor's amount is 80,000 rupees. And next is bills payable amount. Bills payable amount is 40,000 rupees. So by bills payable, by balance brought down, amount is bills payable amount is 40,000 rupees. 40,000 rupees. So till here we pass the entries of the assets entries. Now bank account, partners capital account, realization account, and creditors account, and bills payable account. So this amount is a bills. These are the creditors account, and a bills payable amount is the open liabilities amount. All the entries got over from the balance sheet. Now the adjustments. All partners were insolvent. The following amount was recovered from them: Dinesh 2,000 rupees and Magesh 2,000 rupees. They bought a amount from their private estate. That private estate amount is Dinesh 2,000 rupees. That will come in a bank account. To Dinesh capital account, and Dinesh capital amount is 2,000 rupees, and Dinesh and Magesh amount is 2,000 rupees. To Magesh amount is 2,000 rupees. So this is the bank balance, and so enter the all entries. Now we'll enter the for the deficiency account. In the deficiency account, Dinesh capital account, it will come in a debit side. So all the partners capital account of the amount will be transferred in a debit side of deficiency account. Dinesh capital account is 12,000 rupees, and Magesh capital account is 16,000 rupees, and the Ramesh capital account is 2,000 rupees. Their total deficiency amount is 30,000 rupees. 30,000 rupees is the deficiency amount. And now, while calculating deficiency account, we need to take a creditors opening balance of the liabilities of bills payable and creditors. Creditors amount is 80,000 rupees, and bills payable amount is 40,000 rupees. So I'll show you working note. The working note. So in this working note, creditors amount for 80,000, bills payable amount is 40,000 rupees. So we'll take it if this one is a 4:2 ratio. So 4:2 ratio, we'll calculate this one, distribute to both partners. So creditors and bills payable, they are not able. They have 30,000 rupees deficiency. 30,000 rupees is a deficiency. So this 30,000 rupees will be distributed to creditors and bills payable in the ratio of 4 is to 2. They're not paying the fully amount because it is 80,000 we need to pay and here it is 40,000 we need to pay. But in the amount they have, that is 30,000 rupees. So this 30,000 rupees they will share in the ratio of 4 is to 2 ratio. 30,000 into 4 divided by 6 amount is 20,000 rupees. 30,000 into 2 by 6 is 10,000 rupees is the amount rupees. These two 20,000 and 10,000 rupees will be give it to the deficiency amount of the partners, like bills payable, creditors, and creditors amount is 20,000 rupees, and bills payable it is 10,000 rupees. So total amount is 30,000 rupees deficiency amount. And this 20,000 and bills payable creditors amount and bills payable amount will be coming in a bank account also. Like a bills payable 40,000 rupees, and here now we'll close the balance of open balance of creditors account and the bills payable amount. So by balance brought down, credit side amount is more in the bills payable. So 40,000. So it also 40,000 and 10,000 is the bills payable. 10,000 amount is the deficiency amount. To deficiency amount. Deficiency amount is 10,000 and to bank account amount is 30,000 rupees. So total amount is both side is balancing. 10,000 is the deficiency amount for the bills payable accountor. And now liabilities, and the creditor side it is a credit side it is 80,000 rupees and deficiency amount is 20,000 rupees. To deficiency amount 20,000 rupees and to bank account 60,000 rupees. So for the creditors account 20,000 is the deficiency amount is they're paying from the 60,000 and 20,000 rupees is the deficiency account, and for the bills payable 10,000 is the deficiency account. These two accounts, to bank account and credit account and a bills payable account will come in a bank account. So by creditors account 60,000 rupees. Next, by bills payable amount 30,000 rupees. To realization account 80,000 rupees. This is building amount 40,000, computer amount 30,000, and data amount is 10,000. So to realization account is 80,000 and total amount is here 92,000 rupees of the bank in the bank account.